All right, let's get right into it. Today we're doing something a little different. We're not just looking at the market, we're going to try and engineer an investment machine. To do that, we're going to run a little thought experiment, fast forwarding to March 2026, to see what a really aggressive, really specific AI strategy might look like. And the whole thing kicks off with this question right here. How do you take the world's biggest, most powerful companies and somehow make them even more aggressive? Well, you make one single critical change to turn them into a laser-focused bet on the future of AI. Okay, so first things first. For this thought experiment to work, we need a baseline. Let's imagine it's March 2026. Who's running the show? Who are the new kings of tech? And there you have it. Wow. NVIDIA is just sitting pretty at number one, a complete monster at over $4 trillion. Of course, you've got the usual suspects, right? Apple, Alphabet, Microsoft, Amazon, but look down at the bottom. That's the interesting part. Broadcom, the networking and chip giant, has actually pushed its way into the top 7, and that means Tesla got knocked out. So, okay, this is our starting lineup. All right, now we get to the main event. This is the big move, the one critical decision that changes absolutely everything about this portfolio. Here it is, we're pulling Apple out and we're putting AMD in. Now, this isn't just shuffling tickers around. This is a massive strategic shift. You're taking out Apple, which is, a fortress, a total brand ecosystem, but maybe its growth is slowing down by 2026. The AI phone market is getting saturated, and in its place, you're subbing in AMD. And AMD's entire story is about being that crucial number 2 for AI chips, grabbing all that spillover demand from companies who are just desperate for another option besides NVIDIA. So why do it? Why make such a gutsy move? Well, it really comes down to 3 things. First, AMD just moves more aggressively with NVIDIA. When the AI hardware cycle is hot, AMD is really hot. Second, it's a direct play on that whole second source idea we just talked about. I mean, the big cloud guys, Microsoft, Google, Meta, they need an alternative to NVIDIA. And third, you're basically saying, I'm willing to trade some stability for a shot at much, much higher growth. And this quote, this just nails it. The portfolio is now almost entirely focused on enterprise cloud and semiconductors. It's a shift from consumer to compute. You see what's happening? This isn't a bet on you and me buying the next iPhone anymore. No, this is a bet on giant corporations spending billions and billions of dollars to build out their AI data centers. It's a total pivot from the consumer to pure, raw compute power. Okay, so we've made the swap. Let's take a look at the final machine we've built. What does this thing actually look like now, and how do all the pieces fit together? What you're left with is basically a super concentrated AI and compute fund. And the most important words there are foregoing broad diversification. Let's be clear, this is not a safety in numbers kind of deal. This is a high conviction all-in bet on the companies providing the picks and shovels for the AI gold rush. I absolutely love this breakdown. It's so good. Because this isn't just a random list of companies, right? It's a system. You've got the brains, that's NVIDIA and AMD, the raw horsepower. Then you've got the nervous system, that's Broadcom, making sure all the parts can talk to each other super fast. Then you've got the landlords, Microsoft, Google, Amazon. They own the digital real estate, the cloud where all this AI stuff actually lives. And finally, you have the ad engine, Meta, which is using AI to monetize the biggest social network on the planet. It all works together. Now look, this is definitely an aggressive play, no doubt about it. But it is built on a foundation of absolute titans. These companies have what we call wide moats, these huge, durable competitive advantages. You've got NVIDIA's CUDA software that basically locks developers in. You've got Microsoft's grip on the enterprise. Meta's social network, you can't just replicate that. These guys are the best of the best for a reason. So, okay, we've got this powerful, highly specialized machine. But everything has a cost, right? What's the price you pay for all that power? And that brings us to maybe the most important part of this whole discussion, the trade-off, the classic battle between high growth and higher risk. First, let's talk about the upside, the dream. This is why you'd even think about doing something this crazy. If you look back, say, from 2016 to 2025, a basket of these top tech stocks would have given you an insane 875% return. I mean, look at that compared to the S&P 500 at 235%. It's not even close. That's what happens when you cut out all the slower-moving companies that drag the index down. But, and you knew there was a but coming, right? This is a huge one. This kind of concentration, it cuts both ways. Let's just rewind to a really tough year, 2022. The S&P 500, the broad market, it took a big hit, dropped almost 20%.
That was a rough year for pretty much everyone.
But for this group of stocks, it wasn't a downturn. It was an absolute crash. They fell over 41%. Think about that. More than double the loss of the overall market. That is the kind of volatility we're talking about. That's what you're signing up for. And this slide just lays it all out. It's the fundamental choice. On one side, you've got the S&P 500. It's like a big, steady cruise ship, diversified, safer, slower. On the other side, you've got this concentrated portfolio. That's a speedboat. It's going to fly when the weather's good. But man, when a storm hits, you're going to feel every single wave. You're trading stability for explosive upside. Plain and simple. So, where does that leave us? Well, it leaves us with one last really big question. This whole portfolio, it's a massive bet that the AI hardware boom just keeps on rolling. So the question isn't just if a strategy like this will pay off. The real question is, for how much longer can this incredible run last? Something to chew on. Thanks for tuning in.